India SME Summit is one of the largest gatherings of key industry players with the goal of empowering Indian SMEs to leverage financial and technological solutions to grow their businesses both domestically and internationally. Micro, small and medium-sized enterprises are essential to the inclusive and balanced development of economies worldwide, contributing to both GDP growth and large-scale employment generation. In fact, MSMEs make up over 90% of all firms and account on an average for 70% of total employment and 50% of GDP globally. In India, as per the Udyam MSME data, there are around 157 lakh registered MSMEs, of which more than 5 lakh are small and medium enterprises. These enterprises are slated to play a major role in making India's goal of becoming a $5 trillion economy a reality. Therefore, it is imperative to help the SME ecosystem to prosper and become competitive, not just domestically, but also globally. Today, joining us at this grand forum are key industry stakeholders with the objective of highlighting the financial, technological, and international growth opportunities present in the ecosystem designed to foster the growth of Indian SMEs. And with that brief context, I would now like to kickstart today's evening with our first conversation on powering the growth of SMEs. It has been observed that two sectors played a predominant role in steering India to become a $3 trillion economy post-pandemic, and those were startups and SMEs. Given the economic growth of the nation is interlinked with the growth of SMEs, the Indian government has launched a slew of schemes, policies such as the Marketing Assistance Scheme and a more competitive lean scheme to empower Indian SMEs to improve their quality, innovate faster, and chart a roadmap to become market champions, both locally and globally. Our next session brings together two industry veterans to address the impact of these schemes and policies on the SME ecosystem and further understand why fueling the growth of SMEs is of national interest. Joining us for this conversation with CNBC TV18's Managing Editor Shireen Bhan, I'll call her on stage, and with her, Amitabh Kant, G20 Sherpa and former Niti Aayog CEO, and Hitendra Dave, CEO, HSBC India. Ladies and gentlemen, a big round of applause. They're coming on stage.
Good evening, ladies and gentlemen. What an absolute pleasure it is to see all of you here. It's very rare to see a packed audience of this size in Delhi on a working day. So thank you so much for coming out here, for your participation. We truly appreciate your time and the effort that you've made to be here. What should I say about my star panel here today? Both these gentlemen are truly long-term India bulls, and it's very rare again to have an occasion where I'm sure they're going to be competing with each other to say who's more bullish on the India story. So let's get things started. Before we talk about the India SME story, let's talk about the India story. I'm going to steal the line from Hitendra Dave's presentation. You said your first slide when you talk to clients in India and outside of India is, let's talk India. So Mr. Dave, let's start by talking about India. We are speaking here in the midst of uncertainties globally. We're speaking here in the midst of global macroeconomic challenges, particularly global banks find themselves vulnerable. We're seeing what's happening in the US. Flip that to India. Veteran banker KV Kama telling me he's never seen Indian bank balance sheets as strong as they are today. He's never seen better parameters, better metrics for the Indian banking sector than he sees today. I want to understand from you, what's changed for the banking sector?
Thanks Shireen, and welcome everyone. I think banks are a reflection, right? We are a mirror. So if bank balance sheets are good, that means the segments of society we serve, their balance sheets are good, right? I mean, that's how it tends to be in banks. So 5 years back or 6 years back, when everyone spoke about the twin balance sheet problem, the bank balance sheet problem was because of the problem in the corporate world, right? It wasn't because of anything internal to it. So if you look at the 4 segments of society broadly that the banking system serves or the economy survives on, right? You take Start with banks. You know, we've known about the amount of capital banks raised between 2019 and 2022. A lot of that capital was raised in anticipation of losses that would come in personal loan books, SME loan books, general corporate loan books, and lo and behold, almost everybody seems to be repaying their loans on time. That's the data point that Mr. Kamath mentioned about. So corporate balance sheets, including small corporate balance sheets, including retail balance sheets, all appear to be good. You look at government balance sheets, right? We saw the GST data for the month of March just now. I mean, April data, but in March activity, 1,80,000 crores, right? Incredible numbers. I think 2 years back, nobody would have believed it. You look at direct tax data. So government revenues are good, and that means whatever government needs to do socially, free food grain, subsidies, etc., it is able to do. Then you look at corporate balance sheets, right? I mean, the amount of deleveraging that has taken place. So I think as an economy, we are perfectly poised in the context of your opening comments on global geopolitical and economic issues, that all four engines of our economy, I think, appear ready to fire. And now it's for us, people like us, people like the group here, to see what we make of this coincidental or consciously created outcomes.
Well, let me say it's a happy coincidence, if we can call it that, that all the ducks are lining up in our favor, in our advantage at this point in time. Mr. Kant, let's address the India story with you, sir. As we just heard there from Hitendra Dave, many things are looking strong at this point in time. There is, of course, the issue of deleveraging that's taken place. Corporate balance sheets are looking better, bank balance sheets are looking better, but so is the government's balance sheet. The government's balance sheet is also looking better. We've come off a record GST collection number. Direct taxes are looking strong as well. And the hope is that because we are less exposed to the global market, hence we are less vulnerable to the global uncertainties at this point in time. How do you see where we are poised today? What do you see as our biggest advantage?
So Shireen, I think first is that during the COVID period, we managed to digitize our economy in a very big way. Secondly, we carried out vast structural reforms, whether it was IBC, RERA, GST, lowering the corporate tax rates, redefining MSMEs here. All this. I think we also use that opportunity to provide a huge impetus to our startup movement. I think all these structural reforms will pay you results in the next decade and a half. Actually, in contrast to what's happening, what happened in the western part of the world, where they gave big packages, which led to now leading to inflation, then tightening of interest rates. And actually, if you look around the world, what's happening as a consequence of that, resources are flowing from emerging markets to the developed world. Whereas future growth, if you look at the global economy, the share in the global GDP of developed world is coming down. The share of emerging markets is going up. And therefore, the future of growth, future of job creation will all happen in emerging markets. And therefore, resources must flow to emerging markets. The contrary is happening because of policies pursued by the developed world. And therefore, it's very, very important that our banking system remains structurally very, very strong, that we continue to lend to our MSMEs. And it's important to say this because if you look around the world, our government to, the GDP, the debt ratio, the government debt to GDP ratio is high. The private debt to GDP ratio is low. It's only at about 55%. The private debt to GDP ratio in USA and China is at about 140, 150%. So the private debt to GDP ratio must rise in a very systematic manner. This digitization process, so what we've done, the account aggregator system that we've built up, we've linked it up to the bank, we've linked it up to the insurance, now we are linking it up to the GST and flows. All that, once it starts flowing, you will see a lot of more credit flowing from banks to the MSMEs, and that will enable MSME sector. MSME is very, very important because This sector is responsible for over 40% of our exports. This is a sector which creates jobs for India. If India has to grow with equity, if India has to grow with jobs, all these people present here are the key drivers of that growth and job creation.
And on that note, you deserve a big round of applause. So do applaud yourself for the kind of contribution that you serve to the cause of the Indian economy. Several points raised there by Mr. Kant, and let's address the issue of access to credit. I mean, I think everybody in this room itself will bear testimony to the fact that it continues to be a challenge. Now, let's talk about your book, for instance, where it is currently today in terms of your SME book, and what is the aspiration on how much you would like to see it grow further?
Well, I think as HSBC, I think the fact that we are there in this summit, I hope anything else I say will become unnecessary. We are doing this because we want to let our strong and drivers of the economy, as Mr. Kant points out, we want to play a role, right? Our book is growing. This book for us is growing at almost like 30-40% for the last 3 years. We've set aside a reasonably large size fund even for lending to startups, which is a very rare thing to do, because as we all know, startups businesses tend to be more about cash burn, and if you ask any conventional banker, do you want to fund losses, which is what cash burn is a euphemism for, then so we are taking the extra steps. But I also want to make a broader point here, right? I mean, there is a reason, and now I'm talking as the industry here as opposed to my bank per se. There is a reason why bankers have been largely cautious about lending to MSMEs, and I hope events like this and conversations like this and debates like this trigger that change which is much needed, which is that we are conventional lenders. We look at a balance sheet and we say, what is your top line, what is your expenses, and what is your residual profit to yourself. And in most cases you saw balance sheets and P&L statements that said, do not lend to me. I do not make money at all. I have no buffers if interest rates go up. I have no buffers if somebody... Now that was not true, because these are very successful business people. I inevitably think everybody here knows that they will manage their business in such a way that they will never ever have negative cash flows, right? But the books didn't say so. So to the extent that now we have not just the financial statements, but correlate that with bank statements, correlate that with your GST and returns, correlate that with some of the digital invoice technologies we have, correlate that with their submissions to the EPFO, for example. A business is claiming I'm going like this, but the number of employees they're depositing pension fund for is going like this. So I think you will find the ecosystem for which the entire credit goes to the public authorities here, right? This is not done by the private sector, which is a unique to India phenomena.
Yeah.
As that ecosystem goes from one bank to the other, one borrower to the other, you will find there will be enough information which will make lenders feel comfortable that I am lending to somebody against a particular transaction or for holding of an inventory where there's enough track record that inventory gets converted into cash sales or so. So I think we are at the cusp of a revolution, and I use that word very deliberately, of growth which is on the back of credit expansion to MSMEs, because in India otherwise I would say about 1 million or 2 million families largely have got all the bank's credit in a country as big as this. So we are waiting exciting times.
We're on the cusp of a revolution primarily on account of the digitization aspect and the flow of information?
No, that is an enabler. We are at the cusp of a revolution of how much money from the banking and formal banking system will start replacing because everybody still borrows. They borrow from friends, family, chit funds, whatever they call it, right? So that will increasingly get replaced. Interest rates will become more sensible. Banks will also force more discipline onto these entities, and that revolution, which is of growth, of employment, of exports, of companies M becoming S, S becoming M, and then M becoming hopefully in India Inc. I think that the seeds for that have been laid during COVID, and we will see every year it start happening.
So let's talk about this revolution, Mr. Kant, and I want to talk to you about this revolution in the context of size. In the context of size, you've often lamented about the fact that India has some world-sized companies, but Nowhere enough. And for the Indian SME sector and the Indian MSME sector to grow and flourish, we need a larger ecosystem, a much larger universe of world-size companies. Now, the government in the last few years has done things like the production-linked incentive schemes, ostensibly to build national champions and also to draw in foreign investment and build international champions who build in India. Is that enough? Do you also believe, as we heard there from Hitendra Dave, that we are on the cusp of a revolution? Is this an inflection point for the Indian SME?
So, Shireen, I am a great believer that we are on the cusp of a revolution. We are on the cusp of a revolution because India has to grow at high rates in the next 3 decades. But for that to happen, MSME sector must grow. And for that to happen, 3 things have to happen. One is, MSMEs must focus on quality, quality, and quality. That's number 1. They must make quality products to penetrate global markets. We are not selling in India alone. We are a part of a global value chain. The value you get by exporting and becoming a part of the global value chain is about 7x more than what you will get domestically. So you must make the top class quality products to penetrate global market. Never compromise on quality, number 1. Number 2, we've done a lot of work on ease of doing business, but we need to scrap all rules, regulations, procedures for MSMEs, make this the easiest and the simplest way for only, there should be no human interaction with any government officer. It should only be digital interaction. Make this the easiest, simplest way for MSMEs to grow and prosper. That's number 2. Make India the easiest place to do business in, like Singapore or New Zealand now is the easiest place to do it. So we should aim to be the easiest place to do business in, number 2. Number 3, to my mind, now we have access to data of bank, insurance, etc. But soon we'll have access of data through account aggregator system of the invoices and the way bill to the account aggregator, and therefore greater credit in a transparent manner will start flowing to the MSMEs, because for them to grow bigger and bigger and bigger, they need greater credit. And 4th, I'm a believer that MSMEs will happen only if India has vast number of large companies, because how did MSMEs come up? When Maruti came in and became a large company, you had tier 2 producer, tier 3 producer, tier 4 producers. So we need a vast number of MSMEs. After all, whom will they supply to? They'll supply to large companies who will then sell India or abroad or wherever. So you need large companies, you need backward forward linkages with MSMEs. They should supply and they should then be paid promptly. And therefore, India needs very many large companies. And when we conceptualize PLI was designed that we create large companies. We make things bigger and bigger and bigger and bigger in 5 years' time. And in 5 years' time, make India productively the most efficient economy in the world. And we were giving ourselves 5 years' time to make India more competitive than China is right now. That is the challenge before the country. That make ourselves in logistics, through Gati Shakti, through a whole range of through better roads, better ports, providing linkages, that in 5 years' time, India should be more productively efficient than any other country in the world, and then make these MSMEs grow and prosper.
You know, I want to pick up on both what we heard there from Mr. Kant as well as Mr. Dave and come to the audience. Let's do a quick straw poll of the audience. Do raise your hands if you're in agreement with Hitendra Dave that Indian SMEs are on the cusp of a revolution. That's not, I wouldn't say that's even 50% of the room. I'm trying to understand why the business confidence of the Indian SME is not reflecting what we heard from you. Let me also understand again from this room if you believe that ease of compliance has improved significantly. If you believe that ease of compliance has improved more than 50% in the last few years, raise your hands. That's an even smaller number than the previous show of hands. So let's address this issue. While, we might rank better on ease of doing business indices, etc., this room seems to be telling you a different story, Mr. Kant. Where do you believe the missing gaps are? Where do you believe we need to do the work?
So one is that I think the government of India has become very easy and simple. A lot of homework needs to be done by the states. Most MSMEs get in touch with the state governments. We need states to become even more competitive by scrapping a lot. So we've done this exercise on rules regulation. Most of them relate to the states now. And therefore, a lot of rules regulation procedures need to be scrapped by the states. And therefore, my view is that we need about 10, 12 Indian states to grow at about 10% plus. And if they grow at 10 to 12% plus, then India will grow at high rates for the next decade and a half or 2 decades. That's important. The real energy has to be brought into the states now.
Let's talk about one of the challenges that I would imagine that many of these participants in the room face, and that is the cost of capital. It's not just access to capital, but it's also the cost of capital. We've seen what's happened as far as global interest rates are concerned. The US Fed hiking rates by 500 basis points. We've seen the RBI do a hawkish pause at this point in time. We've also seen where the 10-year bond yield is today. What do you make of where we could potentially be when we talk about the cost of capital?
So I think at a broader level, I hope many people are puzzled, right? I am also puzzled why on the day the Fed raises rates to the highest in the last, 20 odd years.
We're at a 13-month low in terms of the 10-year yield.
Exactly. And the policy rate in US is 5.5 to 5.25 now, but the 2-year yield is below 4. And the 10-year yield is also just around 4. So it is the bond market, which prides itself on being way more intelligent, by the way, than the equity market, is sensing that something is wrong in the West. Okay. Now, we will see who is right and who is wrong, right? But to this audience or the viewers here, what the Fed funds rate is, what the RBI repo rate is, I think the direct implication is relatively low. That's much more people who issue bonds in the international capital markets or even raise money from the bond market locally. I think that's that segment which is much more sensitive. What is more relevant for this audience or for mid-sized corporates and below, I think tends to be the cost of funds of the banking industry. Now, your channel is making so much about the fact that bankers are out there in societies on weekends, raising deposits at exorbitantly high rates. So, just as they do business, if raw material cost goes higher, they try to push up the product price higher. We also, unfortunately, are also answerable to our shareholders. So if the cost of deposits is going higher, then the lending rates will go higher. But that said, at least my observation, and this is an observation I have shared with many other senior bankers, at least in Mumbai, is that for well-run MSMEs, I am almost certain cost of funding actually has come down on a relative basis in the last 4 or 5 years or so. What used to be standard double-digit, going towards teens, that's increasingly becoming less and less. But I do caveat that with well-run, MSMEs who are working with banks to ensure that there is transparency and there is governance and there is disclosure. So if whatever I said in my earlier part is going to come true, that is, I get so much information, not from the borrower, but from the data ecosystem, that my credit comfort goes to the point Mr. Kant makes, that if the very large companies crowd in a lot of supply chains and MSMEs, then I'm effectively taking a risk on the large corporate. So the borrowing rate for the chain in between should have some of that and some of the quality. So I would actually say that on average, the spread between RBI policy rate and rates at which MSMEs borrow over the years has come down quite dramatically, and you can verify that separately also.
Sure. Mr. Kant, let's talk about one of the issues that both of you raised, and that is the network effect. And the government is hopeful that given what we are seeing play out globally at this point in time with geopolitical tensions in certain parts of the world, a reframing of geopolitics, that India stands to gain. You know, whether it is Apple looking at manufacturing more in India, or the Indian government looking at launching a semiconductor policy to start manufacturing semiconductors in the country over the next few years, which will then develop ecosystems of its own kind. Now, you know, it's a slim window of opportunity as well, because there are also other countries and other players who are trying to make good on this opportunity. Where do you believe our opportunity lies, and what do you believe we need to leverage at this point in time to the advantage of the audience here in this room?
So, you know, firstly, I think the India story has just begun. And it's just begun because the world will increasingly see a demonopolization of the global value chains. That means leading global companies which had invested very heavily in one country and were sourcing about 90 to 95% of the component supplies from there are going to diversify. This is inevitable. A lot of that should automatically come to India. Now that will come to India if we become more and more productively efficient, which we should try and do. But I think the important thing that has happened is that we've, in the last few years, we've managed to digitize very effectively. And my request to all of you is that each MSME must be a digital company totally. And you should be able to feed your data in a transparent manner to the banks and to financial institutions. It's very, very critical. Thirdly, I think, to my mind, our quality of infrastructure that we've created in the last few years, having built 55,000 kilometers of roads, all that will pay us very rich dividend in the coming years. Also because the extent of digitization, that 98% of people in India pay direct tax, which is digitally, that our invoices and e-way bills are all digital, that we do about 11x more payment digitally than what China, real-time payment on mobile, than what Europe and America does. We do 4x more than China. All this will pay us dividend in the coming years. We've built the building blocks, and you will see a lot of that result flowing in the coming years. So my view is that irrespective of anything, the fact that our population will be very young, that even when we are 100 at the age of, in 2047, when we are 100, our average age will still be 35. Our average age is 29 now. And then it'll be 35 when the rest of the world would have aged. We'll be a very young population, that will be supplying 22% of the workforce of the world. That will drive demand in a very big way. The dependency burden of the population will be very low in India, and that will drive demand, and that will drive India's growth in the coming years in a very big way.
Yes, you wanted to come in on that?
I just, since you mentioned that this is a competition between two super optimists, I want to also highlight that, the population is a great boon or it's not, and one of the greatest challenges, people like Mr. Kant has to handle it much more, being part of the policy making circles, is there are 10 to 15 lakh people joining the workforce every month. That's not a small number, right? And many of them are not, I wish they could all be digitally savvy, but it takes time, right? It's a journey. So, I completely agree. I think the next 25 odd years are for us to use or to lose. Okay, and if we lose it, then I think all of us will look back and frankly kick ourselves, right? That because a combination like this, where because of geopolitics, you are friendly with the countries with lots of surplus capital, you have the population effect, right? 500 million people, right? 50 crore people are below the age of 20. people would, I mean, this is population of Europe, which is, just imagine the optimism of the youth, right? If they got proper jobs and if they had proper skills, we could be way beyond what we want to dare to dream, even people like us who are dare to dreams, but we will have to get this employment thing right, and that's why this seminar or this conference, because everyone recognizes that the multiplier effect of an SME is or MSME is much higher than that of you will have a very large factory that produces world-class phones, but may use 4,000 labor. But to the point Mr. Kant makes, that there'll be back end of that will be another 500 or 400,000 people or so, yeah.
No, absolutely. From an employment generation perspective, I think the contribution of the Indian SME is well known, and that is expected to continue as well. But let's talk about tangible next steps. And I don't know how many of you know it, but Mr. Kant is shortly going to be launching his book. How did you find time to write a book in the middle of everything else that you do, Mr. Kant?
So, when I was in my term in Niti Aayog was getting over. I thought I'll get down to writing, because there was a lot of experience. I'd worked in Niti Aayog for about 6.5 years. Before that, for about 3.5 years in DIPP. So that was almost 10 years of experience of how the government had changed, and a vast range of reforms that had been brought in. I'd got associated with Make in India, with Startup India, with PLI, many of these aspirational district program, many of these programs I was involved with. And that was a huge learning experience for me. I'd lived my life during the 8 years of this government, and I'd lived my official life. I've worked in government for about 42 years now. So I've seen the transformation that has been brought in, and the energy that has been brought in through Startup India, Make in India, and all these aspirational district program. Also through PLI, I mean, all this huge boom that we are seeing in Apple and Samsung. I've seen this energy. Also on infrastructure side. So to me, that was a great experience, and I just wanted to put it down on paper. So it took me about 5-6 months to write it out quickly, and I just sit down with it in late evening, and I do this work for about 3.5 hours every evening. So I was able to put it down quickly. But I had to do a little bit of research on the path, because this is about 75 years of business and enterprise. So I had to do a lot of research on what had transpired when British colonized us. We had, India had about 24% of the global GDP. By the time the Britishers left, it had shrunk down to 5%. And then the British Raj was replaced by License Raj. I'm a great believer that I've always believed that if India is to grow at 9 to 10%, it's the private sector which has to make India grow. The government must retreat in all sectors, and the government should only be a facilitator, catalyst, and should only do good policy formulation. So this book is all about business and entrepreneurship, and about enterprise in India, and how they have transformed India, and how they'll transform in India beyond the 75 years.
It's important that you say you believe that the private sector should drive growth and the government should continue to play an enabling role. Mr. Dave, let's address this issue. The growth that we've seen, especially in the last few years, has been government capex. Private capex continues to be elusive. For as much as we talk about wanting to capture the opportunity and so on and so forth, private capex is still elusive. Do you see a change there? Are we on the cusp of a private sector revival? Because I would imagine that will also impact the ability of this room and this audience to deliver on the kind of targets that we hope they can.
Yeah, no, this is a question that gets asked a lot, right? That if everything is as good as what Mr. Kant is saying and what I am also saying, and I know you also feel, then why are the big boys of India, Inc. not coming out with those mega 30,000, 50,000, 70,000 crores, what we used to see approximately 10 years back? And my sense is it won't happen exactly because what they did 10 years back. 10 years back you had businesses with or without good credentials, undertaking investments, in billions of dollars. Billion became a very easy number in India, right? I mean, we are a rupee economy, and we started talking $1 billion very casually. And then you had this very famous situation of House of Cards, And when we went into those house of cards, what we noticed is the entire money was that of the public, because the deposit base of the banks in India basically is public deposits, and it's backed by government shareholding in many, many cases. There was very little equity. So when things went bad, somebody just washed their hands off, and then banks had assets which we don't know how to run a cement company or a steel plant or a power plant. So that's one reason that everybody has learned. The corporate India has learned that you need to be sensible about debt and equity. Banks have learned that project reports which show endless growth, you need to test those. And the third thing is there's been so much of assets available in the secondary market. One of India's largest steel plant was acquired by Tata. One of India's largest, the other was acquired by ArcelorMittal, cement companies by the Birlas. I'm taking big names because these are the ones you would expect. So this process has to digest through. My own sense is capex is happening, but it is not happening in a shape and form that we are used to, and I don't think that will come back. I don't think it should come back also that soon, by the way. But if you see the number of commercial complexes that are sitting thousands, millions of workers, right? I mean, that is cement and that is concrete, and you go to, I mean, Hyderabad from what it was 10 years back to today is a different city. Bangalore to what it was 10 years back to today is a different city. NCR itself, right? So that is also creating a lot of employment and creating a lot of output. India's services exports are now at $30 billion a month for the month of March. It's remarkable. It used to be 15, 16 a year back, now it's 30. So capex is happening, but it is not of the shape and size that grabs eyeballs and media attention, is my sense.
Yeah, but that's an important point that you make, that, you know, let's not assume that going back to the past is A, necessarily going to happen, or B, that, you know, we need to get used to a different lens of looking at this. But Mr. Kant, before we wrap up, before I let you go, you know, if you were to take 3 tangible next steps to try and ensure that the revolution that both of you speak of is in fact a revolution that we see being realized on the ground, what would those be? Just 2 or 3 key steps, next steps in this journey.
So first of all, you know, India needs to fire on many cylinders. It can't be that we'll keep growing on services. It's not possible. Many economists tell you that we are a services economy and we should grow in services. You can't grow at high rates by just being a service economy. You won't create jobs. So you need to grow on services. You need to grow on manufacturing. You need to grow on MSMEs. You need to enhance your agricultural productivity, which leaves a lot to be desired. And you need to grow on urbanization, which will become a very big driver of growth in the coming years. So all these sectors need to grow. Secondly, my view is that you need states as champions. Some states have grown at high rates, Gujarat, Maharashtra and all. There are limitations of their growing. But Bihar, Chhattisgarh, Jharkhand, Madhya Pradesh, Rajasthan, UP, I mean, if UP was a country, it would be the 6th largest country in the world. So these states need to grow at 10 to 12% per annum for the next decade. If this part of India grows at 10 to 12%, or even at 9 to 10%, India will boom. These are the most populous states of India. That is important. And the third thing to my mind is that in today's India, there are 1,022 women to 1,000 men. There are more women than men in India. Women have to drive India's economy, and therefore huge focus on jobs for women, women-led development, and improving their literacy, on improving their learning outcomes, health outcomes, nutrition. To my mind, if 50% of your population is not contributing to your GDP, India will not grow at high rates. And therefore, that's critical to my mind. These are my 3 agenda.
Well, on the third note, you do deserve a round of applause, and I hope that everyone here in this room will take that forward. We've certainly taken it forward. HSBC and CNBC TV18 have launched a campaign called Future Female Forward with the idea of improving and enhancing women's participation in the workforce. So, Hitendra Dave, you want to pick up on that before I get you on your closing comments?
No, I just wanted to add that to the excellent points, as always, Mr. Kant made. I think to the extent that, you know, there are SMEs who are aspirational, which means you are obviously going to cater to local demand, but also want to cater to global demand. I just wanted to make a point that you will need a good banking partner. Okay, the name is all over the screen in case you don't get the hint. But on a serious note, I think a bank, hopefully us, but any other bank which knows how large corporations around the world expect you to run your business, what kind of employment practices you have, what kind of sustainability practices you have, what kind of disclosure practice. If you're going to export to Europe, for example, it's a matter of time before they will stop accepting products from any part of the supply chain that have some level of carbon emission or something. So I would just say that choose your financial partners. Obviously, you choose your customers well, you choose your vendors well, you choose your employees well. People underappreciate the value of having a high quality financial partner, not just a lender, but somebody who can walk the walk with you as you become aspirational and start serving local as well as global needs. So
10 on 10, nicely done. Good plug, Hitendra Dave. Well done, well done. Amitabh Kant, I'll give you the final word.
So just 2 points. One is the future will belong to only MSMEs which go digital and which go green. So sustainability and going green, because the world is going to go green. There will be huge disruption. Europe will stop taking products which are not green, and therefore digitizing your entire production and supply is critical for you. And secondly, becoming sustainable and ensuring that your products are very, very green in future is very, very important. That will bring you value. That will enable you to attract more and more capital. That's important. And secondly, I just wanted to compliment HSBC and CNBC, because I've never seen such an inspirational audience of young MSMEs ever. And it's a very lively, vibrant audience here. So my compliments to all the people who've assembled. I've never seen such a big gathering of MSMEs. So compliments to them.
Well, ladies and gentlemen, a big congratulations to you. You got Amitabh Kant all excited. And Hitendra Dave, thank you very, very much for putting this audience together and for sharing your insights and your observations on where we are, but more importantly, the road ahead. Thank you very much, ladies and gentlemen. It's been wonderful having this conversation here with you, and we wish each and every one of you all the very best with your future plans. Thank you very much.
Thank you so much, Shireen. Thank you, Mr. Kant and Mr. Dave, for that insightful conversation. A lot of tips from that excellent panel discussion that we had a short while back. Going digital, going green is the mantra for MSMEs really, and India is at the cusp of a revolution when it comes to supporting MSMEs. We're now moving on to our next session, ladies and gentlemen, where we seek to gain insight into the right financial strategies that can empower SMEs to scale their operations outside the country, have a bigger global footprint. As mentioned in the previous conversation, Indian SMEs have massive potential to become global market champions, and proactive measures are being undertaken both by government and private stakeholders to guide SMEs in this direction. Access to formal finance is one key pillar that supports the growth of SMEs. The following discussion sheds light on the financial solutions, networks and strategies that can be adopted by SMEs aspiring to give their business a global footprint. Please welcome on stage, ladies and gentlemen, Ajay Khanda, Director, Glen India; Rajiv Chawla, Chairman, Integrated Association of Micro, Small and Medium Enterprises of India. We will shortly be joined by Deepesh Nanda, CEO, GE Gas Power, South Asia; Jaideep Singh Kalra, Director and Head Business Banking, North India, HSBC India. I believe we'll have our guests on stage shortly. I'll request our audience to stay in the hall. We're going to have another very sharp discussion. We'll request the audience to stay here. In a short while, we're starting our discussion, so we will request everyone to be seated. Thank you once again, everyone, for joining us. I know many of you in the audience want to grab a cup of coffee, but we will really request everyone to stay right here in the hall for this next very valuable discussion, and we will be getting you some of the best industry practices right here. So let me just introduce everyone once again. We've got Mr. Ajay Khanda, Director, Glen India. Thank you very much for joining us. Mr. Rajiv Chawla, Chairman, Integrated Association of Micro, Small and Medium Enterprises. And Jaideep Singh Kalra, Director and Head, Business Banking, North India for HSBC. Let me start with you, Mr. Chawla. We've heard a very sharp discussion with Mr. Hitendra Dave and Mr. Amitabh Kant saying that the opportunity for MSMEs is here and now. They must go digital, they must go green. States must scrap all obsolete laws, make it easier. We must strive to make it the easiest ecosystem in the world for SMEs. But if I were to ask you about the journey over the last 20 years, when it comes to the ease of doing business for MSMEs, where do we stand and where would you rate India right now?
Many of us here, we've been in business for more than 2 decades. Personally, I've been in business for almost more than 3 decades now. And we've seen the journey of the times of sales tax returns and then the VAT returns and then the central excise and, things like those, and then finally now GST and things. A few things are there. Online, or should I say technology, has actually helped businesses. Government, of course, has aligned many of its policies and many of these things with technology. And that is definitely making lives easier for us. India rolled onto the GST in 2017, scrapping many other taxes, VAT and central excise, service tax, etc. That, of course, is yet another help. Today, anything and everything, all return filings are online. So things have really moved positively. Let us also understand that India, in terms of ease of doing business index, we moved from 142nd position in 2014 to 63 now. And so that, of course, is a huge step ahead. Many of the laws have been decriminalized. Almost 24,000 laws changed. So a lot of positive things for the government to mention and for MSMEs to experience. And yet, for the MSMEs, when you did a vote here, there were not very many hands. And one of the major reasons is that industry is a state subject. So depending upon which state you're located in, whether it's Uttarakhand or Uttar Pradesh or Odisha or Haryana or Maharashtra, things would always be different. So different entrepreneurs will come up with their different experiences. Also, the movement of states has not been as fast as that of the central. So while the central government, of course, would like that every state should become leading and introduce technology, and there is a competition also on ease of doing businesses with various states. For example, Haryana, where I also have my businesses, we came out in the top 3. We became number 3 in ease of doing business. The very next year, it dropped from 3rd to 13th position, depending upon the different voting strategies. And let us see now where we move. So at least now there is a competition. But for the MSMEs, there are some laws which are still archaic, still to be addressed. And sometimes I really wonder who would address, the central government or the state government. For example, more than 2 lakh enterprises only in Haryana do not have a factory license just because they're in a non-conforming area. They do not even have a pollution CTO or a fire NOC. So with these three critical things missing, how do you expect ease of doing business there? Also, the government introduced a zero defect program. And in the very first speech that our Honorable Prime Minister delivered from the Red Fort in 2014, 15th of August 2014, I remember, he talked about the Z program then. And he really wanted this program to become, the nation's drive. And yet, today, if you look, less than 10,000 MSMEs in India have gone in for Z rating. Only thing is that major compliances that have to come from state, the factory license, the CTO, the fire NOC, etc., are still missing. So I believe that India is moving northwards in terms of ease of doing businesses. Many things are technology supported. Many things are state government and central government supported. Now we have faceless assessments in income tax, for example. So yes, there are positive strides in many ways, but there is still a lot more to be done, especially for the MSMEs in the manufacturing sectors, and states have to take that lead because states are still the drivers.
Right, and that definitely is a big sticking point. Mr. Kalra, if I can get you in, this was mentioned by Mr. Amitabh Kant as well, that at least 10 to 12 states in India must grow at 10% plus. They must scrap all obsolete laws when it comes to MSMEs. It's easier said than done. Now, when you are advising your customers, SME customers, if you had to advise them in the audience here as to how to come up with a strong business case, a strong product, which has a strong export competitiveness in global markets, how do you do that? How do you provide a common theme, a common advice to your clients across the country where you have unpredictable market conditions, you've got a different set of laws governing them in different states. So how would you work around such an ecosystem?
Sure. Thank you so much for the question. And I think at a very macro level, we see a lot of changes happening in the economy. First and foremost is data. There's a lot of data now available, which was not available 5 or 10 years back. Secondly, there is digitalization. Earlier, the digitalization was really touching a very large corporate. Today, digitalization is touching SMEs at the core. Thirdly, we always talk about demographics of our country. Demographics are really shaping up well. You've got a young population, as well as we talked about women entrepreneurship and participation of women. And I would say finally demand. What we are seeing in India today is a very strong domestic demand, as well as attention from international supply chains. So I would say these 4 Ds are really going to drive the Indian economy, as well as encourage the SMEs to change and to adapt. As a bank, what we are trying to do, and most of the ecosystem, we're trying to use as much data and digital to ensure that we are able to deliver our services, our credit, financing, or otherwise at a much faster pace. Because I think that was one of the key nuances which was missing for supporting SMEs in their journey for growth. Secondly, in terms of, I would say, demographics, let's see how we can encourage more women participation. As banks are not only coming up with special incentives for women entrepreneurs, we have even tailored some of the basic traditional products where you get improved covers where you have women entrepreneurship. And I would say finally demand. I mean, I think India is a hotspot. We've got a lot of attention as a country. I think it's a great opportunity for SMEs to capture this with both hands. And we as a bank are trying to help wherever we can SMEs when they export or they set up a presence in over 50 countries where we are present. And I think that's a huge opportunity. Yeah. So I would again go back to a cliche, 4 Ds, but I think that kind of really is capturing a lot of what we are doing in the market.
Right. So that would be probably the third lesson from today. The first was, of course, India is at the cusp of a revolution, digitization, and going green. And 4 Ds from Jaideep: data, digitization, demand, and demographics. Very important there. Let me also welcome Dipesh Nanda, CEO, GE Gas Power South Asia. He's joining us on the panel right now. Before we come to Dipesh, if I can get a industry view also from Mr. Ajay Khanda. Mr. Khanda, when it comes to your business, Glen India, you're into kitchen appliances. You told me a very interesting thing a short while back. We are an SME, but we don't behave like an SME. We have a vision, we behave like a big company. How important is that when you want to have a global footprint? And when it comes to exports, because exports are very critical to India's growth story. We have so many PLI schemes, 13 to 14 PLI schemes to drive exports. Is there something missing when it comes to addressing the SMEs in helping them export more?
First of all, thank you very much for having you here. Now, what the question which you have asked is, the problem here in India is that most of the SMEs, they think very small. And India, I don't know why, but from the very early stage, the government was also making them keep small, like small industry, small industry. So most of the people, when they start a small industry, they want to remain small, or even if they want to grow, they make small factories. But wherever, if you say go to China or any other place, there you feel that the companies which, when they are even small, they think big. And when they think big, they make big plants, they make big plans. But in India, most of the people, they will have, say, many of us here, if we talk, they will say, I've got 3 factories. Somebody will have 4 factories. But if you go to China, this guy will be having 1 factory of 20 acres. But here we will be having 1,000 square yard, 5 factories and things like that. We are very scared of keeping extra labor because the labor laws are like that. So problem is that the vision is not there. And my friend here, Rajiv, he also has this, I am SME of India. I keep telling him that he should make these SMEs think big. So when we started around 20 years back, as I told you a little while ago, see, we thought that we will never think like a SME. We will think like a big company. So we started with our own brand. We never took any advantages of a small scale company given by the government, because even if we take those small benefits, that will keep us small. Because say when we started in 2000, around 2000, there was a law that if you up to a turnover of 1 crore, there is no excise you have to pay. The problem is that if I keep myself to take the advantage of that 1 crore, I cannot grow beyond 1 crore. So now I'm already making the benefit of 15% excise. So if I want to grow above 1 crore, then I will have to open another company. So I will open another company. So I will never be growing out of that 1 crore syndrome. So we never took that advantage. We always thought that we are a big company. Say, I will give you an example in 2007. Here Mr. Amitabh Kant and everybody saying digitization, digitization. In 2007, when our turnover was around 49 crores, we installed SAP, we were, I think, the first company at that time below 50 crores which installed a ERP from SAP. Similarly, say, I think around 7-8 years back, we banked with HSBC. Now, we are a very small company. And going to a bank like HSBC, you can't even think of. And before COVID, 2019, I'll tell you in 2017, we made our office paperless. We were all digital. Most of the companies did this after the COVID. But we were, even before the COVID, we had already made our office paperless. Then I can give you another example. We put up a plant in Faridabad, in his area only, and we have installed a 700 kilowatt of solar power. Our factory runs on, 100% runs on solar power. There is no water, there is no sewage, we don't discharge anything outside. Everything is consumed. So this is the way we are ESG, we are following all ESG norms. So all these things we think and we want to do, and we are doing it. The problem here is that I feel that most of the companies, other MSMEs, they are not thinking big, and because they are not thinking big, that is why India is not growing that fast. That is what Mr. Amitabh Kant is saying, that if we want to fire all cylinders, so one of the cylinders is MSME. If MSME is not going to fire, we are not going to generate those employment where those 15 million people coming into the employment, and then who's going to generate that employment? Somebody has to do it. So this is where the problem lies. Absolutely.
Right. Think big. That is what Mr. Ajay is saying. That's an advice for all MSMEs. And like Mr. Dave also pointed out a short while back, it's not like there is something wrong in the books or these SMEs are not making money. They are in the business and they continue to be in the business because they have strong cash flows. They are doing well at many levels and that's why they continue. The only thing that they need to do now is think big, think global. Mr. Nanda, if I can get you in. I saw you nodding vigorously when Mr. Ajay was speaking about ESG in his business, how they're utilizing solar power. How important is this for SMEs across the country to start using energy efficient techniques, focusing on renewable energy, cutting their carbon footprint across businesses?
Thanks a lot for that question, and congratulations on the successes that you have had and you have thought ahead of times. Now, in terms of ESG compliance, so this is the problem statement. Between the time of the pre-industrial age till 2050, we need to cap the increase in temperature of Earth by 1.5 degrees C. Today in 2023, that number is already 1.2. Unfortunately, the amount of carbon that we emit, today we need to reduce that carbon footprint by half. We only have a limit of 500 gigatons to get a little more specific, but at the rate at which today's emissions are, we'll probably hit 1,000 by 2050. That means the temperature will go up by say 1.8 to 1.9 degrees. And you have different outcomes with increase in temperature. So the need, to contain carbon is extremely critical. That being said, for MSMEs to embrace ESG, I think there are a host of advantages. Number one, it's your brand. I'm sure that when you heard him speak and when he said that I run my plant based on solar, there is no discharge, you could immediately connect, right? That this is a company that one would like to be associated with. Second is access to new markets. Access to markets outside of India, the consumers are getting extremely conscious. Carbon footprint is becoming a need in many of the markets. Third, I'd say also in terms of talent, right? The young talent today is looking to work with organizations which are socially conscious. And then finance. I mean, you have access to funds that support companies that embrace ESG. So here's my suggestion. I think like most large corporates have made announcements and have taken a pledge either to go net neutral or to go net zero by a certain point in time. Embracing that, in this segment of MSME is going to give you a host of advantages, and I think that's the road forward.
Right. Thank you for those thoughts, Mr. Nanda. Let me get in Mr. Kalra once again. Jaideep Kalra, I'd like to understand and press that point further when it comes to sustainability, when it comes to ESG. Europe has a carbon tax. Mr. Dave just mentioned how it will become difficult for you to export if you don't meet those carbon norms. United States has an Inflation Reduction Act. Keeping in mind the changing global regulations when it comes to environment, climate action, what is the advice that you're giving to your clients? What is the kind of advice you'd like to give to SMEs in the audience, those who are already in business, those who are starting off, how to have your products battle ready for global markets, which are moving very, very fast and in an uncertain way towards laws which really mitigate the climate crisis?
Sure. I think from an SME or MSME perspective, I would say that ESG is clearly good for business. We all know that global supply chains or even domestic supply chains are increasingly using ESG as a metric. and therefore the same OEM or a same global partner or a domestic, large corporate would expect that its supply chain is compliant. And a very clear ESG metric has been evolved, which is called Scope 2 and Scope 3. So therefore, clearly ESG is today good for business. Tomorrow it could be a necessity. So it's really a call for change for the SME sector. Moving on, I think when you look at social metrics or even governance, clearly people are the most important, element of your business. And being more socially conscious is not only going to help SMEs retain, grow, develop their people as well as their ecosystem. And finally, governance, I think one major change we've all experienced in our country is that we are moving towards much better standards of governance. So clearly businesses also need to meet those standards. So I would just say ESG is a real necessity as well. And as a bank, we have pledged towards certain sustainability targets. And we clearly believe that we need to support businesses in this transition. And with not only financing, but some level of advice, we've got partners. So if any of the SMEs are keen to learn more about this subject, we would love to be playing a role in that. Yeah.
Right. Mr. Rajiv, getting you in at this stage, is there enough awareness about ESG, about the need for sustainable businesses? Secondly, I think this is a question that everyone would like addressed in the audience. What are some of the critical gaps when it comes to financing, funding that SMEs across the country are facing? And when we speak about access to finance and an enabling ecosystem, what do countries like China, Vietnam, South Korea provide to small and medium enterprises, which we don't right now and we need to emulate?
I'll touch the ESG thing first, the awareness amongst the MSA. Let me tell you, if you're not aware beforehand, law will in any case catch up with you. For example, on 1st of July 22, there is complete ban on single-use plastics. So irrespective of the fact whether you are aware or how conscious you are about ESG, law will catch up with you. Go back 10 years. Honorable Supreme Court many years back banned crackers sale purchase in Delhi. So I'm sure thousands of MSMEs would have lost their jobs at that time. Again, decades back, in Delhi, there was complete ban on diesel auto rickshaws and taxis and buses. So everyone had to move to CNG. Industries were relaxing at that time. Now there is a complete ban on diesel gensets starting 15th of May in entire Delhi NCR. So those MSMEs which have not yet prepared to move to gas or to cleaner fuels would be impacted. So point is, it is, ignorance is not bliss, it is suicide. So if an MSME is unaware of these laws, law in any case will catch up with you. So if you do not have a gas connection already, or you do not have a gas genset, starting 15th of May, be ready to face, your unit can be sealed. This is one. Second, let's talk about the groundwater usage. Government has created a groundwater authority. Now in Haryana, there is an HWRA, Haryana Water Authority, Regulatory Authority. Now repeatedly they were advertising, asking every industry, especially MSME, to register their existing tube wells. Only registration, no fee, nothing. Handful of MSMEs did that. And for others, now there is a late fee of 1 lakh rupee. And if you don't, if they catch up with you, recently 32 industries in my city, Faridabad, they have been fined 10 lakh rupees each. So point is, the laws are going to be increasingly stringent as far as ESG norms are concerned. Let me tell you that Honorable Prime Minister has already made it very clear that by 2070, India should be a carbon neutral country. So expect many more stringent laws, and therefore it is important, especially for the growing MSMEs, and especially, just listen to what Mr. Ajay said, how you have to become more sustainable. Second, there is already a zero defect, zero effect scheme. I was hearing Mr. Ajay say that he never availed of any incentive. But then, I mean, of course it's a matter of choice. But then why not? If any other unit, if you want to make your unit a zero discharge unit, you get up to 50% of the cost of becoming a zero discharge unit, up to 1 crore. So if I give you 1 crore so that you can only, do tomorrow what otherwise you would have done 10 years later. So it's an incentive for MSME. Similarly for, to enhance your quality, we arrange for you 20 lakh every year. 50% of the cost of your testing equipment, up to 20 lakh every year, so that you enhance your quality. Similarly, 50% of the cost of setting up an ETP, up to 25 lakh. 50% of the cost of, bringing in technology, 75% of the cost, up to 50 lakhs. So if there is incentive worth almost 2.5 crore available to each MSME, and only because you accelerate your steps which otherwise you would take later on. Now, for example, if you move from a oil-based furnace boiler to a gas-based or cleaner fuel boiler, you get 30% subsidy up to 15 lakhs. So why not do it today? So my point is, the ecosystem on one hand is creating laws. On the other hand, they are also offering you incentives so that you get ready for future. Idea is not to close SMEs. Idea is to help them, handhold them, move ahead. Let me mention, I can see an entrepreneur here, and I know him for almost 3 decades. I see Mr. Shami Kapoor there, an entrepreneur who 30 years back set up his first small unit in a conforming area, so that he could get a factory license and pollution NOC and something. And then he always moved ahead with times. And today, running a large conglomerate, this is the kind of MSME which actually is poised to grow, alike of Mr. Ajay. Right. To come to credit, the second part. Credit is always a challenge. Maybe not for people in this hall. The fact that you have access to the HSBC, CNBC, SME, and you have invite to that shows that you are eligible, to be part of this ecosystem. But at the grassroots, of course, there are challenges. In India, only about 17% MSMEs, they have access to banking credit or institutional credit. Everybody else is funded by friends and family and people and chit funds, etc. Government, of course, introduced a credit guarantee scheme, CGTMSE as they say. And I'm happy to announce that now loans up to 5 crore are covered under that, which means your parents, your family, your friends, no mortgage, no guarantee. You can, if your loan is eligible, if your project is eligible for a 5 crore loan, you can get that absolutely without a collateral. So that is the supporting mechanism. But then yes, Indian SMEs are facing still the challenge of pre-closure penalties. I'm so happy that HSBC is one such bank which is not levying a foreclosure charge, but there are many banks which even in the COVID times, if MSMEs were moving from one bank to another or were trying to sell a car and pre-close a loan, they were being forced to pay 5%, 6% prepayment penalty. I think it's a sin, in an atmosphere like this.
Okay.
And so, of course, and then collaterals. Let us be very frank. There are a handful of banks who would lend you beyond a 70% LTV.
All right.
Yeah. So if you get a bank who can continue to fund you on the basis of your business model rather than your collateral value, that is the kind of bank one needs, so that an entrepreneur is not keen in buying collaterals all the time.
Interesting point. That's an important point to take off from Mr. Ajay. You've been hearing patiently. You were smiling. You probably agree with some of the points there, disagree with others. But when it comes to financing challenges, when it comes to accessing global markets, global examples where SMEs function, where do you think we are lacking right now? Where do we need to improve?
Actually, see, as I said in my first answer also, that because we never behaved like an SME, and when you heard Mr. Dave, he said that 70% of MSMEs, their balance sheet says, please don't lend me. Now, in our case, because of the approach which we took in the initial stages, our balance sheet always said we do not need finance. So when you do not need finance, then the financer is after you. If your projects are well researched and they are marketed well, then any bank is willing to lend you. The problem here is that, as Mr. Dave said, that most of the people, when they took those big projects, those projects were not funded by the equity, only the loans were there, and everybody over-leveraged. So the problem here is that if the MSME or SME or anybody or any organization for that matter, if they are financial, they adopt financial prudence, I don't think so financing is a problem in India. Financing is a problem in India if your books are not in order, your balance sheet doesn't speak well, and now with GST coming in, everything digital happening, things are improving a lot. So in now, most of the MSMEs, I don't think so have any problem. In fact, in our case, I will say that we have HSBC Bank as our partners. During the COVID time, when we wanted to extend our limits, we, over a phone call, over a video conference, I think we got our limits enhanced very easily. So I don't think so there's any problem of finance for right companies.
Right companies with books in order.
Books in order.
And a right business model. Jaideep, if I can come to you, give us a sense of the kind of financial solutions you are providing. And over the last few years, as Mr. Dave was pointing out, you are looking at a 30 to 40% growth in your support towards SMEs across the country. But when you are lending to a firm in this category, what are some of the deliverables you're looking at? What are some of the eligibility criteria that you're looking at? And give us a sense of the kind of solutions you're bringing to the Indian market.
Sure. So I would probably divide financing into traditional sort of financing, and most of the SMEs here have seen the traditional models of financing where you are indeed looking at previous financials, you are looking at collateral, and that gives a strong degree of comfort because the bank ultimately has to deploy its capital, and under various Basel norms you have to see the credit rating of the borrower as well as the collateral availability. But that is obviously clearly creating a challenge for high growth companies. And also when you're financing your exports or you want to grow your overseas presence. That's where I think the banking sector and HSBC, we're trying to evolve into more non-traditional or new age kind of financing structures where you can leverage the data, you can leverage the receivables that companies have, and that can then be funded without the need of much collateral. So that's one major form of financing which would really encourage SMEs to go out and focus on growth. A typical SME, if they really have to fund growth from their collateral and through traditional means like cash credit, overdraft, they would feel restrictive. At the same time, I mean, like we said, there are a lot of opportunities to grow your exports and globally. There again, there are in fact similar sort of products, but with further enhancements in terms of credit mitigation. So I would say that, yes, there is always the traditional product which can be delivered in a much more seamless fashion. There's still a lot to cover there, but there are these new age solutions which do not really need that level of collateral like Rajiv ji said, and also are much faster in delivery. Yeah.
Right. Thanks Jaideep for those views. Mr. Nanda, coming back to you, India is looking to reach the $5 trillion economy mark. Everyone says that is inevitable. It just depends on how fast we reach there. Infrastructure and manufacturing, these are two sectors which are being prioritized right now. But when it comes to growth potential, future growth areas, which people who want to set up small and medium enterprises, those in businesses already wanting to diversify, what would be some of those key sectors, maybe beyond those which are being prioritized right now, which you foresee as strong potential areas of growth in the next 10 to 15 years?
Okay, so to begin with, if I look at the Asian market, right, the Asian market has extremely compelling macros. 3 billion people, 30 trillion economy. And in between you asked a question on countries like Taiwan, South Korea, Japan. So if you look at the entire Asian market, these countries, which is Taiwan, South Korea, Japan, they have a GDP of $35,000 and above per capita. Then you mentioned China. So you have China, you have Malaysia, then the range of 10,000 to 11,000 GDP per capita. Then you have Indonesia, Thailand, Australia, 6,000. Now we are here in South Asia, and India's GDP is roughly $2,500. So the range is between $2,500 in India to $35,000 to $40,000 in Taiwan. And hence to hit that $5 trillion mark, I think that's an aspiration that we can meet and achieve and exceed far beyond the 5 trillion and much earlier. Now the way to do it for the SMEs is to look at, I'd say, 4 elements of their business process. This might sound basic and fundamental, but that's how a company like GE would do in terms of, say, buying products and services. Now in India, we have 18,000 employees, we have 12 manufacturing plants, but yet our annual procurement is $6.5 billion. Now in this, the 4 components that we look at in this order begins with safety. Our emphasis on safety is on a no compromise basis. We want everybody's employee who works in a GE project, works in their factories, to go back home safe. So it begins with a high bar on safety. After safety comes quality. I think the ability to make sure that we not only enhance quality, but also we catch quality slips upstream rather than downstream is a clear parameter in which we kind of rate our vendors and our suppliers. Third is delivery. Now, cycle time is becoming the name of the game. We've had many disruptions in the recent past, which includes the pandemic, the war in Europe, and so on. But having said that, the end user market is still asking, us to meet schedules on time. So first safety, second quality, third delivery, and finally cost. I think the environment is inflationary. But having said that, through initiatives that were mentioned earlier, in terms of using higher efficient products, getting into bill of material where you can save, material, you can make your entire process more lean. There is a method on how you can either maintain cost, if not reduce. If we were to achieve these 4 parameters diligently, I'm sure the business cycle, will get that impetus where those growth numbers that we aspire for, whether it's 5 trillion or above, will be easily accessible.
All right. Thank you very much, Dipesh. Let's take the final round of comments from all our panelists now. Mr. Chawla, if I can begin with you. When the PLI schemes were launched, the idea was to support global champions, companies which are strong, companies which are able to become leaders when it comes to exports. Do you think we now need a dedicated blueprint for SMEs for the next 20 years? Do you feel that somewhere we missed that blueprint?
All right. See, the post-COVID, suddenly India had the advantage of, China plus 1 policy, which many of the MNCs prepared for. So India wanted to capture on those. So I'm all for whatever the government came for with the PLI. Idea was to attract large investments and large corporations. And ultimately, most of us, for example, I'm in the supply chain of many 4-wheelers and 2-wheeler companies. So whenever a large company would come, SMEs would get advantage, tier 1, tier 2, tier 3. Second is that if you look at the entire PLI beneficiaries, there are almost 100 SMEs who have been cleared for the PLI. So SMEs, very progressive SMEs, for example, Mr. Ajay likes, they can be part of the PLI. Third thing is that yes, I believe that the government, while on one hand they introduced PLI, which ultimately would benefit SMEs as well, they stopped two huge support that they were previously providing. One was the interest subvention. In fact, Honorable Prime Minister launched the interest subvention program in October 2018, and it ended in March 20, where 2% interest subvention was given to SMEs if they invest more for their incremental loans. So that scheme has ended. And second, a major beneficiary scheme that was for technology upgradation. It was called CLCSS, Credit Linked Capital Subsidy Scheme, where whenever SMEs would buy a modern technology, they would get 15% of the subsidy. Incidentally, that scheme also ended in 20. So I believe that these two schemes, which were actually incentivizing modern technology and their acquisition, and investments in the MSME sector, these two schemes are called for. So we are, of course, representing to the government. Maybe if not in this budget, the next budget we'll get some allocation. And I'm extremely hopeful. But then, yes, PLI is there. 100 SMEs are also beneficiaries of the PLI schemes. And I believe that in their supply chain, every SME sitting in this room would also very soon be part of that network.
All right. Now, final comments, starting with Mr. Dipesh.
I just wanted to answer the question that you raised before is on exports. So I think one thing that we can do as a nation is to tie incentives to exports so tightly that there is an incentive to increase your exports, and only if you meet that export threshold will you be eligible for not just incentive, but a kicker over that incentive. You know, this is captured very well in a book called How Asia Works by this guy called Joe Studwell. He talks about how Japan took off with METI, only monitoring exports and giving you an incentive if you meet that exports, and stripping off the incentive if you do not meet that export threshold. Once we do that, we'll start competing even more internationally. And with that, you know, our GDP will improve, throughput improves, and so on.
All right. Mr. Ajay, final comments from you. One tip that you would like to leave our audience with when it comes to increasing exports?
You see, for increasing exports, as Mr. Kant also said, that you have to improve your quality. Because the quality at the moment what India makes actually very difficult in manufacturing. I'm not saying everybody, but we have to look at the quality and we have to see to it that if we improve our quality, definitely we can go a long way. And this China plus one is very, very easily possible. But the problem is that that opportunity is not coming to India. The opportunity is there, but it is not coming to India. It is going to Vietnam. It is going to the other countries. Why? Because their quality is better. So here what we have to understand is that all of us here and everywhere, we have to look at our quality and we have to see to it that our products match the quality which China or Europe is giving. And we are capable of doing it. I'm not saying that we can't do it. The only thing is we have to emphasize on it. Until the time we can't make quality, we can't become a big exporter.
Right. Jaideep, any final mantra that you'd like to leave the audience with?
Well, let me just end with a well-kept secret or a lesser-known fact. HSBC is only 160 odd years young in this country, and I think we learn something from our clients every day. One thing which we have picked up from startups is that if you look at your business or your service as a platform, and what we have understood, and particularly relevant for SMEs, is that see what your supplier or your partner can give you as a basic proposition, and then as a platform, do we have the right people engaged? Do we have the right partnerships? So as a bank, I think we've looked at what are the needs of an SME beyond banking. And I think that's an area of research. It's a continuing work that we're doing. And that's where we've found that SMEs today need digital infrastructure. So you need partners around that. You need the best of HR tech solutions. You need a lot of solutions today which a large corporate was probably implementing after paying millions of dollars, but are available from startups at the very inception of an SME. So I'll just stop here and say that, yes, please look at your partner suppliers as a platform and see what best you can get. Because I think you are competing with the rest. It's not like SMEs have a level playing field always. I think SMEs at times have to work much harder, and and we completely appreciate that hard work. Thanks.
Right, and this is clearly a strong playbook for everyone looking to start a business in the country and what to do for the future. Thank you, everyone. A big round of applause for all our panelists.
If I may.
Yes, very quickly.
For exports particularly, and I am just summarizing my thoughts while I was listening to everybody here. Once upon a time, we were told QCD, the quality, cost, delivery. These three fundamentals remain the same for every business, but then focus more, particularly if you want to grow. And then this QCD became QCDDM. The second D is development. So you have to develop very fast. And M, of course, is the proper management of money, management of morale, management of manpower, everything. Now there are two more digits added to this, SS. One is for safety, the other is sustainability. So it is QCDDMSS. So remember these words, these are very important. And I would add one more S, succession plan. You must have a succession plan. I have seen more than 70 entrepreneurs in my MSME of India whom I lost in the COVID times. 70. Many of those amazingly wonderful entrepreneurs, 100 crore plus turnover, were proprietorship firms. By the time family arranges a succession certificate from the court of law, it becomes NPA. Because you can't even deposit your GST or electricity bills and things. So succession plan is very, very important. Right. And another S I would give is support system. Huge support system is available within this ecosystem. So, and we are often unaware of. So remain networked with CNBC, with HSBC, with institutions that create awareness, that tell you how much support is available in the ecosystem. Grants worth more than 2 crore for every SME.
Right.
Do you know you get one international exhibition, entire cost free every year? So that you participate in an exhibition of your choice internationally anywhere, and you grow your export. So a lot of support system is also there. So remain aware of this QCDDMSSSSS that I mentioned, and I'm sure each one of you would see the glorious times ahead. Thank you.
All right, a big round of applause, everyone in the audience. I think it all boils down to, as Mr. Rajiv and Ajay were also pointing out, that no matter what the size of your business may be, don't think of yourself as a small unit. Think big. Think how a big company would plan for the next 20 years, have a succession planning in place, have a sustainability policy, focus on safety, focus on quality, fiscal prudence. All these are very critical chapters when it comes to increasing your exports and becoming a globally export competitive company. Thank you, everyone. And with that, we come to the end of this 3-city chapter of the HSBC India SME Summit. I would like to now call on stage Mr. Ajay Sharma, MD and Head of Commercial Banking, HSBC India, to give us the closing note. Thank you very much, gentlemen, for joining us.
Thank you. My name is Ajay Sharma, and I run the commercial bank for HSBC India. And Jaideep talked about lots to learn. So I probably have a lot to learn. I have been back in India all of 20 days. I left India 20 years ago. So I'm really excited to be back here at a point of time when the opportunity for the country and for the SME businesses and for HSBC has never been so great. I'll try and keep this short because I stand between drinks and dinner for all of you. But I thought it'll be good for me to look at what does the SME business look like when you look outside India. And if you look at ASEAN, which is the manufacturing powerhouse, which India will replace, there are 71 million SMEs. We already have 65 million. The difference is that in ASEAN, 2/3 of the employment comes from the small and medium enterprises, whereas in India, it's probably close to 25%, 111 million people. The GDP contribution is 40% outside, it's 30% here, not much difference. Interestingly, Indian SMEs export 50% of India's total exports. In ASEAN, it's only 19-20%. So very different types of manufacturing happening. The challenges for Indian SMEs and for SMEs across the world remain the same. And that's always, do you have enough access to finance? Outside, I think a little bit more finance is available, but we stand on the cusp of a very different paradigm with India's stack, with the banks being so strong, and use of data to provide financing. And that is where the new models of financing have to come into India. And that is what we at HSBC are committing to, really changing the way we do business. The panels, I think, covered every aspect of what we need to talk about. And Mr. Dave talked about the banking system has never been stronger. And that's really the building block on which financing can go into all the companies in the country. Mr. Khan talked about the benefits of structural reforms that will pay fruit over the next few years. And that's going to be really important. People talked about that we are on a cusp of a revolution, a digital revolution, where financing will be done differently, and where data and digitization really are just enablers. Exports have to be driven by quality, said Mr. Kant. And that was repeated, I think, in the second panel discussion also, where Mr. Khanda said, improve quality, think big, and bank with HSBC. I think we picked up a lot of pointers in terms of how to do business. The second panel was really exciting. The number of things people talked about. The technology has made our lives easier. I think both the panels talked about the states having to probably pull their weight and help things be much better. I think GE Power, Mr. Deepak talked about the war for talent will be driven by companies, and people will be attracted, especially the younger generation, to companies that really have an ESG agenda. So lots to do, but we at HSBC here are here to support you. I think people are very kind to us in terms of ease of doing business with HSBC. Sometimes we can be difficult. We try and improve. But what is our model? I think we want to help you grow. And as you start small, we want to be in that journey with all our companies. We have dedicated relationship management teams who will work with you, find the right answers, find the right solutions. We will focus more and more increasingly on technology to make sure that we help you collect your cash, we help you do trade, and we help you manage your risks around foreign exchange. And all this in a seamless digital manner. And that is our aspiration, that is where we want to go to. More importantly, internationally as well as in India, 1/3 of the organized sector does go international. And we operate in 62 countries. We are one of the last few global banks left with an aspiration to help our customers go international. So we will be there when you look to find out how does one do business in the region, how does one do business in the US, and how do we really create a quality environment with the best products. Finally, I think a few other things. We will use more data to start doing credit decisioning, which means it will make it easier for you to get facilities from us. We also have a $250 million dedicated fund for startups. So I think Mr. Dave mentioned that. So I'll end here, but thank you very much for taking the time, which is the most precious commodity that all businessmen have. And thank you for coming and meeting us. Please enjoy the evening.